A Better Future with Precious Metals, featuring Monex and the world-renowned commodities research firm, the CPM Group, led by Jeffrey M. Christian.
Hello, it's Jeffrey Christian of CPM Group, coming to you from Monex. It's the 21st of July. I want to talk about platinum and palladium, also some words on gold and silver for the second half of this year, and seasonality in metals prices. Before I start, let me tell you an anecdote about Bernard Baruch, who was one of my idols even as a young boy, much less through my life. People asked Bernard Baruch once how he made his money, and he said, "I buy straw hats in September and sell them in May." What he was referring to was the seasonality of the demand and supply of straw hats. In September, at the end of summer, no one wanted straw hats. He would buy them on the cheap. And in May, everybody wanted straw hats for the beginning of the summer, and he would sell them at a premium. And seasonality is a topic that's come up. I've heard some strange misrepresentations of seasonality in precious metals prices in the last few weeks. So I want to sort of clarify that. First, let me talk a little bit about gold and silver and platinum and palladium in the second half of this year. If you look at the first half of this year, platinum and palladium outperformed gold and silver. They all did very well at the beginning of the year, January, February. And since that time, platinum and palladium have held their value better than gold and silver. Going forward, looking at gold specifically, we had thought that the price could peak around $18.25 in late July, early August. We now think that it could go a little bit higher, maybe as high as $18.40, come off a little bit in August and September, and then show some seasonal strength in September and the fourth quarter. I wouldn't be surprised to see the price trading, say, between $1,800 on the low end and maybe as high as $18.50 on the high end. Not a runaway, but some strength there. On silver, we are saying that 2750 is very strong overhead resistance on a technical basis right now. A break above that is possible in the next few weeks, and I wouldn't be surprised to see a spike to 2850. Beyond that, we think the price calms down, but basically we're looking at silver trading between, say, $25 on the low end and $29 on the high end, with the potential for a brief spike below that or above that, depending on what's going on in the markets and the global economy. Now, a lot of people have been talking about how gold and silver prices are low and they're not responding to inflation. And we disagree with that. First off, gold and silver prices are not low. Put them into a historical perspective of even just 2-3 years ago, and gold and silver prices are very high. They rose sharply in July of 2020. They've come off and they've showed some strength on a mixed basis in the first half of this year, but they're actually relatively high. To some extent, gold and silver rose earlier last year in line with inflation expectations. Now inflation is catching up with market expectations to some extent and to gold and silver. Last year, at this time, when the gold price was rising strongly and silver prices were rising strongly, you had this massive amount of government expenditure, fiscal and monetary stimulus to help people during the pandemic and the global economic lockdown. That fostered a lot of expectations of higher inflation, and that was reflected in buying of gold and silver, which drove the prices higher. The inflation didn't come along for 12 months. Now we're starting to see some higher inflation, about 5% on a core inflation basis in May. A lot of that's transitory, really is. Some of it is more permanent, and we'll find out over the next 6 to 9 months what portions are permanent and what portions are transitory. But I think that inflation is catching up with gold and silver, and it's not that gold and silver are lagging inflation. Let me talk a little bit about seasonality before I get into platinum and palladium. There's a seasonal pattern in prices, and gold, the weakest month for gold is July. The weakest month for silver is July or August. Platinum and palladium tend to be weak at this period of time. and then they show a little bit more weakness in October. It's based on trends in supply historically, but more importantly on fabrication and investment demand. During the summer months, July and August, a lot of investors go away on vacation, and investment demand for gold and silver tends to fall. Fabricators also tend to go on vacation on a rolling basis, and they'll shut down their operations. In the platinum and palladium industry, where the auto industry accounts for the largest amount of fabrication demand for platinum and palladium, they tend to cut back, go on vacation, retool their factories for the next coming model year, which they roll out in September and October. Traditionally, that's changed somewhat in the auto industry. But there are seasonal patterns in fabrication demand and investment demand behind that weakness. That weakness is a representation of the lack of demand for straw hats. So if you're seeing weaker prices for gold, silver, platinum, and palladium, July, August, September, that's an opportunity for longer-term investors to buy at a seasonal or a cyclical low. Now, I will say this, seasonal patterns do work, they do exist, but they get overridden sometimes by event-driven price changes. We saw that in July of 2019 and again in July of 2020, where specific events caused investors to load up on gold and silver in those 2 months, overriding the seasonal weakness that you would normally expect in July. But the seasonality does exist, and it's a seasonal weakness more than a seasonal strength. Now, turning to platinum and palladium, and I really want to focus on platinum because I think that's the great place for investors. Palladium's interesting, but the price is already high. The price of palladium has been rising steadily since 2015, 2016. It's at record levels. It's gotten up to $3,000. Our expectation is that the price will trade between $2,500 and $3,000 for the rest of this year and into next year. We do think that the prices will stay strong, but they're at record levels. Now, palladium today, as I'm speaking, is about $2,600. So a move to $3,000 is a pretty good move on a short-term basis for somebody who wants to be adroit and come in and out of the market. The palladium is there. We have seen a surplus last year because of the economic lockdown. That surplus is gone. We have a deficit, a shortfall of newly refined palladium relative to fabrication demand this year, and we have big deficits going forward. So the palladium market's going to remain tight, and prices are going to stay high, and that's a good thing for palladium from an investor's perspective. Platinum, I think, offers much more price appreciation. Platinum was sort of dead in the water, to be crude, between $800 and $1,000 for most of the time from 2015 until 2019, early 2020. You had a couple spikes above $1,000, maybe one spike below $800, but basically platinum has been trading in that range. It has now broken above $1,000 in early 2021, and it seems to be firmly stabilized above $1,000. Our expectation is that the low is probably $1,035 for the next 6 months or so. It could spike down a little bit lower, but there's support at 1,000, and we think 1,035 probably holds. On the high end, we wouldn't be surprised to see the price move toward $1,200 and to basically trade between, say, $1,050 and $1,200 for the rest of this year. The platinum market had a large surplus last year. The surplus is less than half of what it was last year, this year, and it's headed toward large deficits on a persistent basis in 2022 and going forward. These metals are used, as I said, primarily in auto catalysts to clean up the exhaust of petroleum-based fuel vehicles. And that's not going away. And in fact, what we're seeing is a cyclical recovery in the auto industry on a global basis. It's changed because of economic and demographic changes, but it's still there. Now, you may be hearing people talk about how there's this rapid transition to electric vehicles that's going to supplant gasoline-based and diesel-based vehicles, and you won't need PGMs to clean up the exhaust. The market penetration of electric vehicles has gone very rapidly. It's gone from 1% 5 years ago to about 4% this year, 3 or 4%. That means that 96% of the cars are still burning gasoline or diesel and still using platinum group metals. Going forward, you see these incredibly optimistic projections for market penetration rates for electric vehicles, which don't stand up to scrutiny if you analyze them. The capital expenditures to build the factories to make all of the components for electric vehicles is not there and is constrained. The electricity supply is constrained, and the grid stability is constrained. So there are a lot of things that will cause the movement to electric vehicles to be much slower than some politicians and marketing people would have you believe. And if you talk to the auto industry, you'll find senior executives publicly talking about a rapid transition of their vehicle fleet to all electric or electric and hybrid vehicles. But if you talk to the engineering and design and development people, they say, we can't move that fast. Those are sort of aspirational or political or socially motivated comments that we will strive for, but it's not going to happen that fast. Even if it happens as fast as they say, you're still going to have 65% of the vehicles being made and sold in the world using gasoline or diesel 10 years from now, 15 years from now. So there's going to be a continued period of time when we need platinum and palladium and rhodium to clean up that exhaust. And the platinum, palladium, and rhodium mining industry probably is not geared up to supply that metal over the next 10 years. That means to us that there's going to be strong periods of prices for platinum, palladium, and rhodium going forward. And platinum is probably the premier investment metal of that group. Rhodium is extremely esoteric. It's a very small market. It's not traded on an exchange. There aren't really rhodium coins around. There might be some rhodium medallions, but we advise investors not to invest in those. Palladium, there are coins and there are ways to invest in it. Platinum is the most liquid of these markets. And when you look at platinum, it's the one, as I said, that has underperformed price-wise over much of the last 6 years, which means that it has the most capital appreciation potential going forward. That's all for this month. I hope you enjoy it, and we'll talk to you in August.